Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, April 7th, 2016. We saw some pretty good weakness today. A little bit of a short covering bounce towards the end of the day, but that's kind of typical, especially when you have days that have been persistent up because every bounce has been gobbled up, so people get trained to cover shorts and step aside. Eventually, I don't know if this is the one or not. One of these is going to keep going, and then get all the people that covered waiting for a bounce to short again, and all the people that have learned to buy the dips get trapped, and then we see a very, very sharp move to the downside. Still early to say what is going on. It does, just looks like a typical little pullback right now. But when I show you in the other charts, today's move did do some technical damage. So right now, it would make sense to see us get a move someplace down into this 2014, 2008 area with a chance that it could go down to this 1967. But right now, the initial targets, let's just say, are somewhere between the 2014 and the 2000 level. The bearish divergences are saying that even if this support holds and we get a bounce, the downside is probably still more favored than the upside because, it just when you get these kind of technical divergences on a daily chart, you stand the risk of these types of moves. When you get them on the bullish side, you stand the risk of these types of moves. So this is something to pay attention to, even if they, if they find support and rally it up. Eventually, one of these, that they're going to have to pay the piper on these divergences and just the way that they kind of move this this market up. So if we take a look at the 60-minute chart, these divergences have been going all the way from the beginning here. You can see the price oscillator has been making lower lows. We haven't really had any true, say, breather as far as momentum. This is the lowest it's been since really the rally started on a 60-minute chart. If I go down and show you, last time we saw these levels, we were in a really big downtrend, and this was just a bounce. So this is the momentum-wise, one of the strongest moves that we've seen so far since the lows were made. Now, some other reasons why I believe that we're going to head lower before higher, which it's obviously not a guarantee because this market has been playing it's been playing tricks on a lot of people, and I'm one of them. So what I can do is just go over technical say views and where things should go. If the market has something else in mind, or a central bank comes out and says something, then it's all bets off. But this head and shoulders pattern is what I showed you guys yesterday, and I said it was still early on and it needs to break these lows. Well, that happened today. So right now, this is going to be your resistance back up here and all the way really up to, say, the 2049. But target-wise, we're looking for a move to come someplace down into the 2010 area, 2008, and that would be the pattern on this. Now, we already broke this bearish rising wedge as well. So, you have your bearish divergences, bearish wedge, bearish head and shoulders pattern. So these things are throwing up red flags that, we could be heading a lot further down before we find some type of low, and especially with the bearish divergences on the daily chart. So this pattern is looking for, a move lower. Now, we could find some buyers at 2023 that are these lows. Now, what the problem with that is, if they do find lows here, we could be then forming a larger head and shoulders pattern. So we get a bounce that brings us back up to the 2060 level, but all that would be doing is making this the left shoulder, this would be the head, and then the bounce would be, would come someplace up there, and it would just be a very large head and shoulders pattern, and this would actually be more brutal because the target pattern, it would bring the S&P all the way down into the 1930 range. So again, that's way ahead of itself. Let's just see if this, if these play out and we get down to these targets right now. We still have, even though this has been the strongest move that we've seen since the lows, as far as momentum wise, we're still not even close to being oversold, and we just really broke through the 50% line, or the midline. So there's still plenty of room to go to get into the oversold level. So that would open up the door that we could see more downside down to these levels. Now on a 15-minute chart, we are quite oversold here. Remember, I showed you that I was looking at this as just an A. This is our 5 waves up to make the wave B, and it went right up to the 78% retracement, and now we're starting the wave C. So again, I'm still looking for more weakness to fit the pattern, and really it's just the head and shoulders pattern that I'm following you, that I've been showing you. And once that completes, whether it be down at this 2023 or the 2009 level, or even the 2000, then what happens is I would expect a counter trend rally to come up and test these levels again. And if we don't make the new highs, that's when we're going to see people start running for the hills again, and most likely head all the way back down near that 1800 level. But again, that's a little bit ahead of itself right now. Let's just see if these patterns play out. And if we get a bounce tomorrow, what you really want to do is keep an eye on the 2051, 2057. This is where the bears would want to be holding things down. If they do, then we should continue. We continue to see weakness in this market till we get down to the target. So with that, have a great night, and I will talk to you guys tomorrow.